It's gone very well. We set out after our IPO in August 2016 to deliver to our shareholders decent income. We've been paying out 6% dividends since the IPO and modest capital growth on top of it in the context of what is a quite volatile asset class, emerging markets, and that has gone very well. It's quite typical in the sense that the emerging markets historically have always been vulnerable to a rise in US rates and a higher US dollars. However, we should not forget that from a solvency perspective, both at the sovereign and in the private, at sovereign level and in the private sector, they are in the strongest position that they've really been in 30 years. Well, we had a storming win by President Erdogan. He clearly, after the coup from a couple of years ago, has been consolidating his power. That will continue, but that consolidation of power will run into the economic reality of money fleeing the country, high interest rates, and high inflation. Argentina is a super interesting case because clearly, with interest rates at the level where they are, which is very high, and with an IMF program in place of around $50 billion, we reckon that the stage is set for some significant structural and fiscal adjustment in the country, and we see significant opportunities in government and provincial debt. Not terribly good, to be honest, and not terribly good because history tells us that free trade leads to higher efficiency, lower inflation, higher wages, and that clearly is being threatened by the current trade policies emanating from the United States. Undoubtedly, in the currency and in the local currency government debt markets, we've seen very aggressive sell-offs in these markets. We've seen very quick sell-offs in these markets. We have seen significant rises in interest rates in these markets. And I reckon once the dust settles, it bodes extremely well for the second half of 2018.